Yo, what is up, everyone? My name is Dom, and we're going to talk about unusual options activity. Alright, let's kick it off with the disclaimer. So, disclaimer, this video is for educational purposes only. The statements made in this program here are solely the opinion of the show and are not a specific inducement to make an investment. One must perform their own due diligence and realize that all investments carry risk. There's no guarantee of profit. Okay, first one, okay, I'll bring up VIAC first. So, now there was some huge volume in some of these July 2nd 50 strike calls. Now, a couple things that are pretty unusual about this. They're picking a weekly call here. So normally the big expiration weeks for options, you know, where a lot of options are being traded, they're the third Friday of the month. Now, this is the first Friday of the month, so we call this the weekly option because the third week Friday expiration is the main contract. So now it's pretty unusual for 12,000 contracts to be trading hands of these July 2nd 50 strike calls, and you can just kind of look at this open interest and just kind of see why 12,000 all of a sudden is so unusual, and with an open interest of 17. So that's a nice ratio there. I have been in some of these June 40-50 call spread for a little while now. Stock really hasn't moved much. This thing has had a huge pullback. This thing ran up a lot from 100, from 10 to 100, and then they did a stock offering, and some news came out about a hedge fund. Just a whole bunch of stuff that you guys can look up in your free time. I'm not going to get into it in this channel. But this thing has had a significant pullback. Hasn't really done much. It looks like it kind of tops out at 43. Obviously these people are betting that the stock gets through that level because they're buying the 50 strike call, and that expires in a little bit over a month. So these people have a month and 2 weeks for this trade to work out, and they're buying a really far out of the money call. You guys know me if you've been watching this channel for any length of time. I would not buy this far and out of the money call. That's a super low probability trade. That's why it's only about $50 to buy one of these contracts. I would prefer to buy an at the money call and sell an out of the money call. It's a higher probability, and you cut down on the time decay that you are experiencing. So next one I want to bring up is X, United States Steel. Now there was some unusual options activity in these June 4th 29.5 strike call. Once again, this is June 4th, so the normal expiration, the main expiration is the June 18th, the third Friday of the month. They're coming in, they're getting the June 4th, so they're getting the weekly options. And once again, not a whole lot of open interest here. So a lot of people trade these third month of the these third week of the month expiration, and you can just see by all the open interest. And you go to some of these weekly calls, and it's pretty unusual to see a whole lot of volume, almost 7,000 contracts coming in, open interest of 182. So once again, I like that ratio there. And as well, this is a really far out of the money call here. X is trading at about 25.62. This is steel manufacturer, flat rolled steel products. So this is an inflation trade, a reopen trade, materials trade. You can see throughout ever since November or so last year, money has been coming out of technology and going into especially these material stocks. These things have had huge runs for good reason, in my opinion. I've been in and out of X. I've brought this one up on the channel before, but this is a really far out of the money call, like I was just explaining. 29.5 strike. This stock is trading at about 25.62. So that's like a 20% out of the money call. So obviously this person is expecting a huge move here. I don't think they have earnings coming up. They might. I have not checked. Probably something I should have looked into. But I like this stock. I saw that buying. I sold it a little bit too early, so I've been waiting to get back in. So that buying just solidified that I should be getting back in. Now I started a position here. Now I'm in these 25-35 strike calls. It's a pretty wide spread there, but we're going out to July, so we're not experiencing much time decay. We're losing $2 in time decay. with the long call, and with the short call we're collecting $2 in time decay. So there's still no time decay, but as this thing gets closer to expiration, we're going to be losing on time decay a lot faster. So I started a position in X, and it might be trading down tomorrow, so I will use tomorrow as another opportunity to add to this one. So actually, let's check out the chart real quick. This thing has had a huge run. Pandemic low was $4. There's a lot of demand for steel. This is also the inflation trade that a lot of people are talking about. So yeah, this is just a reopen trade, and yeah, I like X here. So thanks to everyone who's been subscribing. I really appreciate it. Make sure to keep the subscribing up, and we'll see you in the next one, everyone.